Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, and we are now on April 8th, 2021, going into the weekend tomorrow, Friday. So we don't have any holidays coming up right now, which is nice. We're back to normal trading. But look at the stock market, just running for new records. People don't even get excited about the records anymore. We're getting the naysayers coming out. The market's too expensive. It's all about post-COVID. It won't last. Okay, that's their opinion. Right now, I want to be with the herd, and the herd is bullish right now. They're looking for anything they can buy as they look at the earnings like in Levi that came out after the market. Can you believe Levi? I just heard the CEO. They've gone in with Saks Fifth Avenue, coming out with a $950 pair of jeans. And then they're now selling another pair that's $188. I was a $20, $50 a guy jean guy. But that gives you the idea of price and appreciation and inflation. I mean, this is a staple. Who doesn't wear jeans? So that is something to definitely think about, okay? So as I take a look at all this, the stock market's still looking good. The dollar helping it as the dollar slipped back from over the 93 level back to 92, and we've carried the euro from the 117 back over the 119 level. These are important parts. In addition, if you're watching interest rates, we're no longer in the 1.7 area. We're pushing down towards 1.6 in the 10-year note. Energy prices stable. That would be the right word for them. So as we take a look at the S&P, what can you say? You're up 2% for the week. I remember when 2% was a year's gain. And you're up 86 points, just powerful. What has the market done? Once it cleared this area, right through here. And I was telling you, I said, you want to get an idea of where the market's going? Take this high to this low and flip it over. All you got to do is take the math, subtract the 2, add it back to that high, and it'll give you an idea of where you're coming, probably in that general area. And you're getting into that zone. That would be the first logical area that the market moves. There's no magic to this. This is what you do as you flip over the potential of a range, and that's where you're at. Now, you might want to be getting our price counts. Price counts in our company are very important. They're a proprietary tool. I've got a whole set of videos on how they work. You can set them up inside of the QT version of our trading platforms, and they'll give you an idea of 5 projections to the upside and downside. You typically don't ever get to the 5th. That you can, but it's so rare. The 1st through the 3rd are the high probabilities, with the first one being the best. And you've had some interesting levels here. Call us, 866-973-2077. It's free. We'll put you on the mailing list for that. But as we work with this, as you can see, it's certainly a blowout, and you've got the market just running to the upside. No way to know where that'll carry it. You're over the key average, and you fought the battle, as I teach in my charting course, at the 18-day average of closes. You're running at the upper Bollinger Band, not getting away from it, and this is what I teach in that enhanced Bollinger Band course under the word education on our website. Higher highs, higher lows. This is a market that my work would be wanting you to be bullish on. The NASDAQ, now you're embedding. So let's back off and not include Friday's action. Both numbers on Thursday over 80. Both over 80 on Wednesday. Not so the day before on Tuesday. So if you can close tomorrow on a strong note and embed, that means the trade will start, in my opinion, again, a buying program on this. Again, that's part of that enhanced Bollinger Band course. I show you how to figure out where they're doing it, what the objectives are, how to play with that. Also, you got to work with another study called a window envelope, because eventually you'll back away from that Bollinger Band. There'll be another number the market likes to go through. But until this pattern is lost, if it embeds, it's a runaway. I know my Dow Jones guys that take my services, they're in this trade. They're in this trade down here from that embedded course. Now, can I tell you everybody took it? No, I'm not managing their money. Can I tell you it was a written recommendation? Did I say it in my morning subscriber videos? Absolutely. And they're looking right now about 600 points in profit. It's about 3,000 a contract. Doesn't mean it'll last. They've already taken half the position off, and today was an add-on day if they wanted to do that, by the way. You fell right down to a key number in the market there, and the next target, again, the upper Bollinger Band. But again, I hang myself out to my paid subscribers. I don't publish track records. I put out every day what it is. They can keep my recommendations for themselves. I don't manage anyone's money. I don't want to be a trading advisor, and I don't want the calls coming in to me, Ira, should I do this, should I do that? You want to know why? It takes me away from what I do best. I don't know who you are. I'm just looking at a chart, and you got to be ice cold when you do that. Does that make sense to you? I hope it does, because if it doesn't, try it. You'll understand. You don't want to become emotional. You want to become disciplined, not a machine. Disciplined. Very big difference between the two. In the Russell, this is the weakest of the indices. Who knows why? The market's fighting, and it has been for 1 week now at that 18-day average. As of this moment, the trend is bullish. And now that you've cleared, let me give you this. If you take a look, the low here was 22.0670 and the high 22.4670. You made the higher high. The bulls now have control unless 22.0670 is taken out. And from there, I am looking for them to say, eventually, if you keep the other indices going, why, maybe what about me? What about me? And you might get one of those pops. For whatever reason, it doesn't want to participate, but it's not overbought. It's in an uptrend now. It's right at the support level. We'll see if it can do that. You know, the cash out zone. In the VIX, you've latched on to what I call, I love these terms, gorilla glue. Why? Notice it doesn't even get away from that. I do think the pros went and wrote puts at 17.29. The market's 16.95. They're not under any pressure at this point. I think they're looking for wherever that 18-day average is. If you get a pop back up, we'll see what they do. Lose about $1, I think they'll say, uncle. But I don't think you're there just yet. In the T-bond market, look at this. Look at how this market's just gone sideways. This reminds me of gold. You had a big downtrend. Now you're going sideways and you're coming up to challenge the upper Bollinger Band. Could that be the end of where this rally goes? I don't know. It's the back end. So many traders are thinking this market's going to put on higher rates, but they don't have to stay in that position. Back here, they were knocked out. I think that right here was where they were knocked out of their shorts. I have many reasons for that. I could even make the argument it was when you crossed right here, and that's what I did to my subscribers. The morning subscribers, I said, folks, I think we've ended a wave to the downside. And I know what I would have said on that, and I'm sure I said it. And you can see what the market's done. So now I call this that you're caught in that psychiatry trade. Back and forth in the Bollinger Band, seeing if the market can go anywhere within them. The 10-year note, not quite the same play. It's much more pronounced in the 30-year. You're overbought. You have a lower low, higher high. I don't see a trend. Again, I see it caught in that wave, but not as clean as the 30-year. In the dollar index, well, you're fighting at the 200 and the 18-day average, but it's a losing battle so far. You looked okay yesterday. Today it gave in. Now, if the bulls throw in the towel, where's a likely target? Well, that lower Bollinger Band, why? You're not even close to oversold. From where you're at right now, it's about 60, 70 points. Could happen. There's a window envelope in here. If you don't know what a window envelope is, take my course. And that'll be a support zone right in front of that. I don't remember where it exactly is, but I know it's in that zone. Where's the resistance? Back up at the 200 and the 18-day average. What I'm not keen on is the risk of going short here with the stop over that high. That's an awful big risk. If the dollar's good to the downside, then the euro should be good to the upside, because 40% of the basket is made up of the eurocurrency. So we're in an uptrend, but the euro did something else today that you pay attention to. You have an outside day up. My rule is if you take out the low of an outside day up within the next 2 trading sessions, you label that a bull trap and you're going back down to the closest moving average. But what it would also do is it could end what's looking like an easy chart right here on the upside. Let's assume that doesn't happen. The bulls, I think, would realize that's a number they don't want to get under, so if they're going to push it and the dollar goes down, your 120.12 area is a potential target to the upside. Keep in the back of your mind, you're very overbought already. In the British pound, the key is not to take out this low. If you do, you lose the uptrend of the swing line, but the swing line, once you got under right here, you sort of took it out of play because now you're under the 18-day average. So the low back here was 137.09. We'll see if the market's just going to meander back and forth here or try to grab its legs and not go through there. Today's low, which is the deepest low we've recently had, 137.21. Bitcoin, does this not look familiar? One of these sideways action moves? It's a consolidation move. You've got the swing line down because you got lower highs, lower lows. You're over the 18-day average in red, so the bias is up as I define it. And momentum in the market, you're already over 70, you're overbought. So I think this market's one of these, just waving at you back and forth in that range. The differential between Brent and June crude, well, look at how it changed. Yesterday you were at 335. You added today 25 cents. That's a big move. And you negated this correction phase that maybe you were going to go back to the 18-day average of closes. Not looking quite like it wants to do that, to me at least. So that keeps the Brent stronger than the WTI. When I take a look at the charts, you've got a pattern of higher lows. Back here you had higher highs. Right now you have higher lows and lower highs. That's not a trend. To get this market bullish, you've got to close over 63.89, the 18-day average of closes. If you should take out 61.60, you confirm more bearishness in the market, maybe going back to 60.43. What about WTI? You've got the pattern of lower highs and higher lows. See that? So you went neutral on the swing line today. You'd have to take out 58.16 to get bearish again. And if you rally much, the resistance is 60.58. But if you take out the high right over here, this high of 60.89, you could actually turn the market back up into an uptrend with any close over 60.58. You're at an interesting zone in this market. Gasoline. Gasoline is just hugging the 18-day average in a downtrend. I don't see this market breaking very much, even though it's a downtrend. I think traders are going to start focusing on the seasonal driving and away you're going to go. Take a look at it all. It gets interesting. Now, I am watching other world events. The University of Chicago today told its students that it's going into a campus lockdown right now because of the spread of COVID again. I'm telling you, this is going to be a problem. Then you're going to hear campuses telling students, Notre Dame, I think, is one of them already now, and if you've ever been to that campus, quite gorgeous, that if you don't get a vaccine, you're not going to their school. So you're going to see things changing in a big way. What about passports for us? As much as people say no, try to get on a cruise ship without one. I think you're going to need something. They may call it something different, but I'll be surprised that you don't have to prove you've had your tests recently, you don't have COVID, and possibly even that you had the vaccine. Nothing would surprise me about it. I write about those type of things and how they're going to impact the futures markets, how the dollar impacts it in my full research. Now, this takes into account not only my morning videos, but it takes into account as well what I write. A lot more. I think it's quite interesting the way that it all comes about because I write as though it's a Reader's Digest. Right to the point, you're busy, I'm busy. I will include graphs in a lot of the different reports that I do because they'll tell the story of what's going on. I want to capture your minute for a 1 to 2 minute read, and that's it, and then I move on. I put it out twice a day. It goes hand in hand with my morning video, and then a lot of it wraps together with these evening wrap-ups, which I let everybody see for free. But you get a lot more information. Now, if you haven't tried it, or any of my information, why not give it a try? It's free. Just go to our website, free offerings, do it. We're not asking you for a credit card or any of that. We keep a list, who's tried it, blah, blah, blah. You get a 2-week trial, that's business days. So you're gonna get 2 business weeks out of this. Give it a try, see if you like that. If you're interested in the enhanced Bollinger Band course, when you're on the website, just go up to the word education. All my courses are there. I'm Ira. You have a great day. It's going to be a wild Friday, I have a feeling. I can't wait. You have a good one.